And good afternoon. Welcome into this Christmas Eve edition of Market Talk. Thanks so much for joining us and making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you can find us, all of our streaming sources, social media links, latest agriculture news, market information, much more. It is all on our website, MarketTalkAg.com. Well, we have wrapped up trade for the week. We won't have any trade tomorrow with the Christmas holiday, and we've had a really solid week throughout grains and livestock, with the exception of Monday. But we recovered much of those losses between Tuesday and Wednesday, and then just had some of that quiet position squaring trade here on Thursday. But we still have a lot to discuss, and let's do just that with our good friend Bryan Doherty with Total Farm Marketing. Let's bring him in here on this Thursday. And Bryan, Merry Christmas to you and yours, and thanks for making the time to join us today. How are you?
Jesse, thank you. Merry Christmas to you and your loved ones as well. And we're doing great. Nice end of the week. Nice, I'm going to say, Christmas gift to farmers who are looking for a little bit of a pay raise this week. They got it, and they might want to take advantage of it. So we'll talk on that here. But yeah, nice end of the week. Corn finished higher third consecutive session, and 5 of the last 6 sessions firmer. Soybeans continue to grind upward. A nice solid gains today of 3 to 7 cents, depending which contract you look at. New crop beans offering some of their best pricing opportunities in several months, with November trading today, closing today at 12.65.
Yeah, I want to talk about this a little bit. Throughout pretty much the whole session up until about the last half hour, grains were just kind of firm. We looked like we were square in the books here ahead of Christmas, trading just right around unchanged, maybe a penny or two higher depending on the contract. And then it appears, we found a little bit of late session buying and finished it even a little bit higher across the board here today. And I was pleasantly surprised with that, and also pleasantly surprised with Tuesday and Wednesday's higher action across the board as well. It was really a great week, Bryan.
Yeah, it was. And so what's driving that? I think you got three, four factors that are sort of underpinning it. One is you've got money flow in. That's one thing. We seem to believe that the managed money is buying commodities as a whole. Well, why would they do that? Well, the backdrop of that is inflationary concerns. This takes us back maybe 2008, other time periods where we've seen the managed money, these big hedge funds who, let's say, are heavily vested in equities, they start seeing inflation. What they'll do is buy hardcore assets, commodities, and they can buy it on the futures with a leveraged position. So they build these baskets which are weighted with different varieties of commodities. So a lot of this buying seems to be coming maybe from that area. We'll get a little better perspective on that with when the commitment of traders report shows us, which is released weekly. But overall, the managed money has been net long, let's say, the corn market by a large degree, more so than other areas. So really good movement in prices. We have some people starting to question whether beans can move higher. The backdrop on beans and corn too is weather in South America. So we got some of that going, Jesse. That has market participants concerned. But beans are priced, roughly $3 higher than they were a year ago, and crop conditions are probably better than they were a year ago for beans. Remember, last year was really dry with beans early on,
Mhm.
but now this La Nina may be making it drier more into this late December, January window.
Well, looking first at the corn market, we finally broke the $6 barrier here, and we've held above it now the last two sessions. You mentioned, how many? What was 5 of the last 6 sessions? Is that what you mentioned on corn? We finished higher, Bryan. I think that's what you said. Um,
It is.
this corn market. What does this mean to close out the week and head into Christmas and head into the final week next week of trade for the year above $6 in this corn market?
I think it could mean many things, but probably the two that stick out at me is one, traders are willing to buy into a long weekend, which, after a nice recovery here, to just put things in perspective, March corn was traded at 582 on the 13th. Here it's 10 days later, and we're at 60. Let's just call it 606. So you've got 20 plus 24-cent rally in there. That's pretty good rally at the top of a trend. So it tells us that the market's willing to stand in front of this weather in South America. It also continues to signal that farmers are just not they're not pushing the corn out of the bin in droves. they're hanging on. They see the input structure. They see this inflation. Doing nothing's been paying dividends. So they're trickling, but they're not by any means opening the floodgates and saying, I'm not getting calls from farmers saying, "Gosh, $6 or I got a good basis. I'm selling 100,000." I'll get a call and say, "Well, cord some bins and would a few thousand bushels," and we're just kind of seeing where it goes. There's not a sense of urgency or pain at this point.
Do you think maybe some of that lack of a sense of urgency could be related to, possibly looking at the books and saying, "I don't need to move corn before we turn the calendar to 22?" I mean, do you think that's part of it? Do you think if it is, should farmers maybe putting in some protection here with $6 now on the board and trying to set a floor for themselves at least, barring
Yeah.
some crazy event next week?
It's a fair and good question. The answer is I don't know because a farmer could just forward contract for New Year delivery, and then when the elevator buys it, now they own it. They got to do something with it. If they don't have a home, they hedge it right away. So one way or the other, you're probably seeing some pressure. So we're not seeing that pressure. So that's one thing. The other thing is just sort of this. Um, just wait and see attitude. I don't know if there's a big differential this year at year end. I think it's more like, well, we don't really need to sell it, so we'll just hang on to it anyway. Um, I think they're looking at several things though. One is they're kind of keeping an eye on the southern hemisphere. That's one. Two, just the overall commodity complex we talked about. Everything's moving up right now in general. Uh, you've got a bean market that's finding strength. You got high price wheat. You don't have a lot of substitution in for corn from a feed usage perspective. So I think this idea of squaring the books at year end, and there may be some merit to that, but I'm not so sure that farmers are just waiting. I just think they're just not selling.
Well, and you mentioned the soybean market, and I think maybe a few different fundamentals there on top of the South American weather and some of those things you mentioned. But you look at meal and oil, continued good strength there. Demand for cash soybean meal right now, bean oil moving higher with crude oil. I mean, it's looking like those products are really helping to support the soybeans themselves here as we near the end of the year, and I think that's a very positive thing to watch. And one has to wonder. You posed this question earlier: do beans have enough room to run higher, Brian?
Well, yeah, you look at where they are priced right now compared to a year ago, and you kind of scratch your head. On the other hand, we just keep seeing one thing after another, things that I don't think you can make it up. I mean, who would have thought, if I would have told you several months ago that, beans could be supported or may find support off a lysine shortage. Well, who who thinks of that? It just
Hmm.
these are things that are out of the norm. So that's providing support. The weather in maybe the Argentine region is a bigger concern, as Argentina is the world's largest exporter of meal. So the meal market was just kind of beat up to no end, and all of a sudden it's just exploded. And it went in October from about $320 a ton to now almost 400, $80 a ton jump, or close to $80 a ton. So if I took just some simple math, 80 divided by 320, yeah, 25% increase in value of the contract in 2 months. That's a lot of acceleration in value, 25%. Um, so you got the meal leading the charge now. You got the weather uncertainty with beans. You've got expectation. Remember, there was a big expectation yield might go up on the October. That didn't happen. So
Hmm.
maybe it happens in January. In December, there's no yield estimate. So you've got those things, but you didn't get the negative club on the USDA, and you've got a pretty good demand market. We continue to hear people compare demand this year to last year on the export front. I think that's a mistake to say, well, it's just the demand isn't there. It's there in a different form. It's there consistently. It's there weekly. I take a look at numbers today. I would certainly argue that 39 million bushels in corn and close to 30 million bushels in beans, third week of December, those are solid numbers.
Hmm. Yeah, I would agree with you. I think a lot of people were saying they were disappointed, but I would agree. I think those are solid numbers on those on quartered soybeans and on wheat as well. Wheat was all right today too, and I think with this wheat market, Brian, it's a slightly different set of fundamentals, but still somewhat the same. We have the dryness in the southwestern plains. We have some of the damage to winter wheat in parts of Kansas and the plain states from last week's storms, and then you throw in some geopolitical factors out there over with Russia and Ukraine. I mean, there's quite a few things with this wheat market, but Chicago KC wheat back above $8 on the board, spring wheat holding around that 10-20, 10-30 range. I mean, wheat's looking fairly strong as well into the end of the year.
It is big wheat for the wheat market. On Monday, we saw at one point I just use March Chicago had a low of 757 and three quarters, so we'll just say 758, and we end the week basically at 815. So basically 760 to 815, 55-cent rally in 4 days. It's putting something back into this. May have gotten a little bit overdone to the downside, found support at the 100-day moving average, but I think when you kind of look at the big picture, it pulled back, ran out of selling interest. The buyers were quick to put their buy stops above the market, got triggered in this week. I think they're looking at this lack of snow cover in the winter week. Boy, no snow cover as you head into late December is not a good picture. That can create some bigger term issues if we start seeing some really uh, cold temperatures come in and then freeze thaw the wheat crop. So I'd say the setup is not really good from a moisture perspective for the plains or for snow cover. It's just not ideal, and we're dealing with I'm going to say the snug world supplies, and then like you said to your point, Ukraine, Russia. Boy, it just seems like that something's going to break there. Seems like it. Hopefully nothing does, but it seems like something's going to happen there. How the market's gonna deal with it, I don't know. Initially, you'd think the market doesn't like that uncertainty, but that's a really key major wheat producing and exporting region of the world. Um, Soviet Econ did come out. That's their USDA equivalent. They did indicate this week a slightly larger crop expectation for next year versus last month, which would also be a recovery from this past season's smaller crop.
Well, Brian, let's flip over to livestock and talk about those markets here today. And, cattle really had a strong day on the futures with triple digit strength across the board. And I know just as we're talking, we're just getting cattle on feed numbers out, and I'm pulling those up. But as I pull those numbers up to go through them real quick, what's your thoughts on just the tone of this cattle market heading into the holiday with the strength today?
Uh, I was surprised at today. So let's start with that. And yeah, I'm looking at these cattle on feed numbers too. On feed, 100%. Average estimate was 99.8. So that's neutral. Placements 104. Average estimate 103.4. So maybe someone might argue that's still negative, but it's a pretty big
Hmm.
range in feeders. And then marketings, I think that's supportive at 105%. That means we're pulling the cattle right through. The market was looking for 104.4. So nothing really surprisingly bullish or bearish in that report, but a really good day today. I don't know if the market was just trying to, get in front of the report, hoping for something friendly. But I'll tell you, I think a lot of this is technical trade. The cattle market, it's in a longer term uptrend. It got beat up in September and October. It's coming back. I think the generalized thinking the last month was that COVID would have impact on demand. I think the market's rethinking that. We're into the holiday season, and um, I I get the sense that people are just kind of sick of it, and they're going to go out and they're going to buy meat, and they're going to celebrate Christmas, and they're going to be with
Hmm.
family, and they're going to exercise caution, and they're going to travel, and they're going to be careful, and life has to go on. And I'm, in, I'm of the opinion that. A lot of people still working at home. They should have, in theory, the money they're saving on gas and buy a nice dinner. I think you got a good demand market there, and the market's been kind of too cautious, I think.
Well, I think it's something to watch as well, and I agree with you. I think the market's been too cautious. Will we see any activity next week? Cash Country's been getting weak, but with Cash Country, I mean, we at least had steady money this week for the little bit of cattle that were traded. So one has to wonder, will we get any activity next week, or are we going to maybe kick the can down the road a little bit in the cattle markets until we get into that first week of January, Brian?
It's a good question. I think they kicked the can, but I think that what the market told us today, and we'll see what next week brings. It could be light volume and just short covering today and some technical trade, but I think the market's got it right. I think it's the board is going to lead cash here, and cash is going to crawl along. The other thing,
Mhm.
as we talk to cattle producers, I get a sense that weight gain has been really good this fall, and maybe that's why the marketings are a little ahead of schedule. We really haven't had any adverse winter type weather, and now we're entering that window where that can happen or might happen. So I'm not predicting. I don't have anything on tap, but you start getting sloppier conditions, and we're seeing some of that in the west, northwest, maybe some moisture, and there's that chance too. And I think you err on. I mean, that's why the April cattle usually lead the market higher, and I think you err on the side of less than ideal weather conditions. Limiting 1 or 2 or 3 days of weight gain. That's a lot of meat that sort of evaporates off the market this time of year.
And of course, we had weekly export sales here this morning, and beef net sales were down 30% for the previous week, so not great. China was a top buyer, but pork net sales were down just slightly here on the day today at the weekly export report. But the pork market hogs were down slightly here today, and I'm just looking at the quarterly hogs and pigs numbers as well, and looks like 74.2 million head inventory, down 4% from December of last year, and down 1% from September of this year. Breeding inventory up slightly from last year. Market hog inventory down 4% from last year, down 1% from last quarter. So we get these quarterly hogs and pigs numbers in here into a hog market that was just quiet and choppy today. It felt like. What do you make of that? How do you think the market could digest that?
Quiet and choppy today, but those numbers right there, I think, are being reflected in the summer months. You're pushing back toward the contract highs, get $97, and I think that's a market just reflective of high input costs. Meal all of a sudden, as we talked about, picked up a ton of value here.
Mhm.
The defer, you look at the deferred hogs. Look when meal rallied. Look at the deferred hogs. That's about when they rallied. So expectations that the producer's probably going to curve things back a little bit just from a feed bill perspective. I think has the market supported. I don't know if that's enough to make the market bullish. I do worry about the export market. We keep reading and hearing about China's at pre-African swine fever numbers, and then they've got these giant hogs and meat and losses mounting in some of their producers. And I you know, I just don't know if I expect to see pork as a big export front to China, but we'll see what the rest of the world does. It may simply be that, if it's costly to raise pigs here, it's costly to raise them elsewhere, and maybe cheaper for somebody else to buy them in, these smaller countries that all those little sales add up.
Well, great insight as always, Brian. Any final thoughts for us as we head into Christmas and head into a week next week, final week of 2021 next week?
Well, first is to wish everybody Merry Christmas, and a safe and happy holiday season, good New Year. And the second is that my final thoughts are just be really vigilant. You've got a lot of markets on the move and a lot of markets higher. We didn't touch base on, but you got something like the dairy market that breached $20 this week. Some good activity there to be thinking about. So watch for signals in the marketplace. Have good conversations with your advisor. Don't spend a lot of time trying to outfigure the markets. Just spend a lot of time on strategizing for whichever way the market goes. That you're balanced and prepared for it.
Well, Brian, I want to again wish you and yours and the team there at Total Farm Marketing a Merry Christmas. And if folks need some guidance and advice, I know they can get a hold of you guys very easily by going to your website, totalfarmmarketing.com, or giving you guys a phone call, can't they?
They sure can. 800-334-9779. We'd be more than honored to have a conversation. And we'd love to help people, as they head into the end of this year and next year. Just take a look at what it might look like for you, and maybe bring some value to that conversation so it's worth your time.
Well, Brian, I appreciate your willingness to be on Market Talk here throughout the year and help it get this show rolling. And we'll look forward to talking with you more as we get into the New Year's. I take a week off next week. So appreciate the time. Merry Christmas. Happy New Year, sir. And we'll talk to you in 2022.
Thank you, Jesse. Well-deserved time off. You're a hardworking man, one of the hardest working men in show business. So we'll keep going.
Thanks, Bryan. Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for our show on this Thursday, December 23rd. I'm your host, Jesse Allen. Have a great afternoon.